So, Kevin, welcome to the first ever Apex Trades podcast. Hopefully, the first of many. It's an absolute pleasure to have you on. As we know, you are an active member of the Discord community that I run, and so what this is about, as a bit of a backdrop, is really there's an awful lot of traders like you and me who are not professional traders, but they are, we classify as retail traders, but they have a vested interest in, I guess, wanting to be better at trading, wanting to understand, I guess, a lot about psychology of trade, and risk management, I think, is massively important and oftentimes overlooked. And so, really, what I want to try and achieve with this podcast is interviewing different people of different walks of life who've got different journeys, come through different ways of learning trade and different things they've picked up along the way. And if there's anything to share and impart knowledge on that, then all the best for it. So, thank you for being my first guest.
Oh, well, thanks for having me. It's an honor to be the first.
Okay, so I have a list of 10 questions that I think will be a good narrative and a good way to navigate through this kind of podcast. And so I'm going to try and keep it within an hour. And so obviously the first question would be, can you share with us a little bit about your background and how you got into crypto trading?
Sure. So I guess to go back to when I first got involved in technology, out of college, because I actually was a music education major by training as a percussionist. But technology had always been my hobby, and just because of the way things worked out, I started as a trainer. So I did get that education bit of my training met. And in technical training there, I started by getting a lot of certifications, like all the Microsoft ones. Starting with the networking systems engineer ones, and then eventually the developer ones. And I found that I really liked development. So after a few years, got out of that, joined an actual development consultancy. We were Microsoft Gold Partner. I think had maybe 200 employees. Learned how to develop in all sorts of languages. This was like the golden time. Java had just come out, C# had just come out. So a lot of great opportunities to learn different things. In that job, I eventually, moved up to management and then executive management. I think my last position there was VP of delivery. Wow. And then actually VP of innovation at the end. So I had about 80 developer consultants reporting to me at that height. But because just the way this was around 2008 to 2010, and so here in the U.S., business was kind of starting to take a turn for the worse, and I actually found a good opportunity to get out and start my own business at that time. So I think it was around 2010. I left, built my own business. This business, which I have still to today, I've never had any employees. Have used many subcontractors, but it's really just me in that. And what it afforded me, after the first couple of years and getting started and building up, I'm basically doubled or tripled my income by starting my own business. It gave me some flexibility with my time, so that I could pursue hobbies, which at the time, I was doing the whole midlife crisis, 40 plus year kind of
That's
thing.
That's me right now.
Oh yeah. So I got really into triathlon, which takes a ton of time, all the training and whatnot. I don't know if you can see, you probably can't right here, but I've got bikes over here, hanging on the wall and stuff. So I was able to do that, but also I was able to start dabbling in this new thing that came around towards the end, 2017ish, which was crypto. And with that, it was completely new to me. So, when you first get into crypto, there's a ton of stuff to learn.
Sure.
I just happened to fall into it right before we started a big bull run. So of course, everything that I did made money, and I thought I was brilliant.
It was like gold.
Yeah. So, that's really when I started trading. Mostly spot there at first, but towards the end of 2017, I did get on BitMEX and started doing, leverage trading there. So it did fairly well. The next year, 2018, was of course a bear market. At that time, I was really into bot trading. I was using a bot system called Profit Trader or Profit Trailer. Sorry. And I had like 3 instances of that running on 3 different Binance accounts, and they just kept losing money like all year long, and pretty much lost most of the money that I made in 2017.
Were they based on grids? Was that grid trading?
No, the way that they worked back then, and they've changed because they still you can buy Profit Trailer today still, but it's evolved quite a bit from what it had been. But back then, there were lots of different strategies that you could use that would determine when it should enter, and then the like assuming that the price went up, it would trail that, and hence the Profit Trailer part.
Sure.
So keep trailing it up, stop loss, and then you make there. If it went down, then you could set it up to DCA. And at the very beginning, the only DCA option that it had was sort of the martingale style, where it would double down. The idea being that as long as you had enough capital, the bots would never lose. Well, you never had enough capital because in a bear market, like all the alts that was trading, were going down like 90%. So, did that. I also got into masternodes, which that was also mostly a money loser for me at that time. But it was very educational. We got to learn a lot about how different coins, were coded, and these weren't like just tokens. These were actual, layer 1 coins. Most of them were forks of Dash.
And just to clarify, Kev, masternodes being kind of validators of transactions on an L1 network.
Yes, and so I mean, most of them had different purposes, but like the ones that I ran, like I said, were forks of Dash, like Pivx and other ones like that. And the way that the master nodes worked is, you'd stake money into them and then you'd run them, and their purpose was not really to validate, because you didn't have to stake to actually do the validations like AVAX and other current, modern day networks, but they would handle the privacy aspect. So there's special things on the network that required actual nodes to perform, and one of those were the privacy functions. So that's what the master nodes did.
But these have been presumably this wouldn't have been like cloud based. This would have been Kit server based.
Yes, server based. So I had because of my business, and I had like 2 very, very large virtual host servers here at my house, which I kind of call my network center, whatever. I had lots of extra space on there, so I just put the virtual machines to run all these nodes on my infrastructure there. So when 2019 came around, I found that I was doing more and more with my trading. The developer in me came out, so I started building all these tools for myself to become a more efficient trader, including like indicators and automating things and back testing strategies and whatnot. And all throughout this whole time, I was really experimenting with lots of different strategies. Primarily, I was still using algo following, which I still use today. Which is it's basically like Fibonacci retracement trading at its core, and of course also Elliott wave to some degree.
Would this have been on like one of the MT4 platforms, or would this have been kind of more onto like TradingView when you were building your
it was all on TradingView because at the time, I mean, the exchanges I was using were BitMEX, Deribit. And this time, those were probably the 2 main ones that I was using. And Binance. I was on Binance still for lots of different things. Mostly alt trading for Binance. Because I don't think they had their futures and perps yet back there at this time. So in 2019, what I started realizing, though, is that, I could actually, all these tools that I was building, I could, like, other people could benefit from. And I was in lots of different communities. I won't mention any of them because I'm not in any but which I And the idea being, prop shops and hedge funds, they could afford to have quants on staff and developers on staff to build the bots and everything that they needed on demand.
Yeah.
But these people make a lot of money. I mean, you make like $300,000 to $500,000 a year doing that kind of thing. So that's not something that a retail trader, which, if the definition is you're trading your own money, not someone else's. That's how I differentiate retail from pro.
I'd agree.
So with that, these retail traders didn't have that avenue. So I thought I could provide that for them, at a price point that they could afford.
Yeah.
Just charging hourly for people to, take whatever they've been successful with, if they needed to have an indicator made or automate their trading strategy, do that for them. So that's where retail trade ops came from. And through that, of course, I was exposed to even more different types of trading systems, things that just random people come up with. A lot of them were good. Some of them were not so good. And I tried to tell them that before, I took their money to make what they wanted, but some of them really wanted that. Maybe they were successful. I don't know.
I'm curious if you don't mind. I don't want to try to go too far onto a segue, but when you decided you wanted to create indicators for certain ways, was that because it was more conducive to the way you wanted to trade and there wasn't something already available, in the whole stock of whatever's there on a standard platform? Like TradingView as an example, was it that what born the idea that you wanted to create something specific to the way you trade?
Yes.
Yeah.
Yeah, exactly. And with something you have to realize is TradingView has, come a long way over the years.
Yeah.
So there's things that are built in now that didn't exist in the past. I mean, even something really simple like an anchored VWAP. I have a whole indicator that's like built around doing different things with VWAPs.
Yeah.
Because back when I built it, the only thing you could do on TradingView was turn it on, and it was like for that session only.
Yeah.
So there was a lot of that, and I mean the community scripts, library went from when I started using it, maybe 5,000 to, I don't know, there's like 50,000 things in there now, and I mean it's really blown up.
Yeah, seems to be quite large. Yeah, the community scripts for sure.
Sure. So just to kind of continue on and bring us up to date, then, like, in 2020 and 21, again, that's like a bull market. I did a lot of trading, did pretty well, continued with everything I was doing in the past, but mostly I was focused on trading at that point. But that also included like alt trading, because I mean, cycle trading where I bought at the bottom, sell where I thought the top was.
Yeah.
And mostly alts. And then in last year, I got a lot more into DeFi and NFTs, and I think everyone kind of took that path and the passive income streams, and some of that was good for me, some of it was not. Just like everyone else, I'm sure. And then like early in this year, maybe late last year, I also started getting into developing on DeFi platforms, so on blockchain bots, like building flash loan bots, or I guess they weren't really flash loans, they were flash I guess the pancake swap type things, and also arbitrage bots and different things like that. And at this point, I would say I'm still like experimenting with those things, and it's not like an income stream for me at this point. But it is interesting because it's something new, lets me keep abreast of what the new developments are. Because before I got into DeFi, I knew about it, but I was like 6 months behind where everyone like really started doing DeFi. I really just thought it was loans on on the blockchain, and then I realized it was so much more, and people were developing these cool custom financial instruments and things. So
yeah, it's crazy. The explosion of what you originally thought blockchain was for versus what it's come to now is crazy. It's like it's so diverse, and the other thing is it's so new as well. Even though we feel, because we've lived and breathed it for the past few years, but it's still only in its infancy. And so what you're seeing now will probably change again in the next 2-3 years. It'll be a completely different space again, and you're going to see all of that continuously just changing, and the innovators of the space like yourself, who are involved and can code. And it's really interesting in your background, by the way, because your background seems to serve perfectly for, number one, you can trade, but number two, this idea that you can just have an idea about how you want to, monitor a specific type of price action or do something, and you can just create an indicator that'll give you that. It's such a good, I think it's such a good advantage to have in this space, and that's it's amazing today, your background, by the way.
Oh, thank you. It's a curse as well sometimes, because it can become a big time suck.
Sure.
Just to prove that something doesn't work. But
how do you balance? Because a lot of the time, again, slight segue, but a lot of the time I find, it's, you see all these YouTubers and big flashy thumbnails, and I made $30,000 and all that kind of stuff, and I often think to myself, there's only really two ways to trade and trade well. Number one, you kind of have to be a slave to the charts in some sense, that you've got to, if you're day trading, you've got to be there, you've got to put the effort and the time in, or you swing trade, where you can kind of, fit and forget. And so, do you find yourself more in the camp, I know you kind of do both in some sense, but do you find yourself more in the camp of swing trading, where you'll kind of fit and forget and you know what you want to do, or do you find yourself doing a lot of kind of sitting in front of the chart a lot?
Yeah, I've done both, and I've done all of it in the whole gradient of time frames that you can trade in. What I've settled into now is trading like on the 15 minute to 1 hour time frame. Yeah. So definitely, I'd consider that day trading to maybe swing trading, like from holding something for a day or two if needed. And the reason, even on the 15-minute chart, I'll do entries, on the 5 or 1 minute chart, but so they can become scalps for sure, but they're usually more in the day trading time frame. However, I don't do it every day. And that's how I balance it. And so for me, I probably would, from like my lifestyle and like what I have time for, it probably would be better for me to just swing trade. However, I find that because of the way the methods that I like to use trading, either my positions would have to be so tiny, or my stop loss potentials would have to be so large to trade on those bigger time frames. Because when you're trading a bigger time frame, your stop loss is farther away from there. So for me, like position size wise, the 15 minutes perfect. Now I just can't, like you said, I don't want to be at my screen like 18 hours a day every day.
It's healthy either. It's just a healthy environment,
right? If the market would cooperate, I would probably just trade like every Tuesday and maybe Wednesday or Thursday.
Yeah.
And sometimes leave Wednesday out, but it doesn't always cooperate. So it's kind of random when I do, because I look at the charts every day, but not all day every day. So I take a look at them, decide, is this a day I'm going to trade or not? Is there an opportunity coming up or not? And if there's not, then that's fine. I just put the charts away for the day and go do other things.
Awesome. Cool. Well, thanks very much for your introduction, matey. Is that kind of brought us up to where we are today?
Yeah, I think so.
Okay. Excellent. So question 2 is, what do you think are the most important skills and characteristics a successful trader should have?
So I think you have to be patient. As number one, because, and that manifests in different ways. I think the clearest way, or because just saying be patient, that doesn't really give any guidance. But I think one of the things you have to do is wait for the trades to come to you. Don't feel like you have to be in a trade all the time. I think I did that for a while, and because it was when I was trying to actually be a day trader and like have that be my main source of income. When you're not in a trade, you feel like you're not working. Even though you actually probably are, if you're sitting there watching all the charts. So, there's really, like, if you're a trend trader, the market's only in a trend, like 15% of the time, and then the other 85, it's ranging. So, it just depends on what kind of trading you do. You have to be patient. Let's see what else. I think you have to be able control your fear and greed. So another way of saying that is to just, try to keep emotions out of it. That's a lot easier if you have a system that you're following. It's very difficult at first when you're searching for the system that you think you need and works. If you just luck into something and it's like working from the beginning, great. But if you don't, then you're probably going to try to tweak it and keep searching for something new, which makes it harder to keep emotion out of it.
Yeah.
And then, like, for me, another trap that I have fallen into is, as a developer, I'm a problem solver. And with trading, a lot of it is like solving a big puzzle and putting things together. And I think you have to have some of that, because that's what allows you to be creative and find opportunities that other people maybe aren't finding. However, you have to be able to turn that off, because if you start assuming that you're the market, like you're smarter than the market because you can like follow these 5 rules that you've come up with and think 3 steps ahead of everyone else. I mean, the market's like random and it's manipulated, and it won't work out.
Yeah. If there was a scale between discretionary and non-discretionary, in the sense that it's really systematic and you stick to your guns, versus almost like that gut feel of you want to change things because you can see something happening in the charts, where would you say, if 100 was discretionary and 0 was non-discretionary, where would you say your trading style fits within that kind of scale?
If you take a look at, like, maybe in a particular time frame, like let's say over the course of a week or maybe 2 weeks, I think I would try to stick to something pretty stationary as far as trading rules and whatnot.
Yeah.
But outside that time frame, I might change. In fact, I've told you in the Discord before that I actually have 2 very different trading styles that I utilize, kind of back and forth. One is the algo following trading, and the other is SMC style market structure trading.
Yeah.
They're very different, and I use them, based on different things. There is some overlap, and it's great when they like come into confluence, but otherwise, I keep them separate. But to answer your question, I'd say I'm probably towards the middle, but leaning a bit more, so maybe 40 or 60, whichever way it was, leaning more towards the non-discretionary side.
I think it's interesting. I think I feel like, I don't know how true this is, but I think newer traders tend to be more discretionary, and I think the more you learn and the more I guess confidence and experience you gain, you start leaning more towards non-discretionary or more systematic, because you get it down.
Hold on a second. Okay. I just think that's because when you're new, you don't have that confidence yet, and so every time you lose, you think, okay, well, what did I do wrong? How could I improve it? And then you start trying to improve things in real time.
How much do you think the size of your capital affects your approach to trading? So, again, going back to the kind of newer trader versus the more experienced trader, I think more often than not, the newer trader will probably start with a much smaller capital than a bigger trader. Do you and how would you approach this actually? Would you be more risk averse with a smaller capital stack than you would be if you're trading with a larger stack?
So, in theory, it shouldn't matter. I mean, based on like the things that I talk about in that risk management and my approach to that, it shouldn't matter. But I think in reality, it probably does. I think for me, if I have a smaller account, I take that back. So if I have a small account and it's like an experimental type account, because I do those all the time, I'll probably be a bit more risk forward in that account, just because I know if I lose it, it's not as big a deal. It doesn't hurt me as compared to my overall like crypto portfolio, let's say. Now, if I have a small, smaller account because like I'm in that bottom of the cycle where I've lost most of my money, then I'll be way more risk averse.
Yeah.
With that. So I think it's not really so much the size of that, but the percentage of like your overall net worth.
Sure, and I think you've got a really I don't know, it's probably not unique, but it was unique when I first come across how you deal with risk management, and we'll get into that because I think it's for anyone who's new to trading and really try to get, when Kevin explains it a bit later on, really try and understand what he's talking about and try and understand about how you can implement it, because it's a fantastic way of really managing risk, but not so much giving yourself really tight gaps in terms of stop losses and stuff like that, but still approaching it in a way that allows you to manage your account overall size loss on a particular trade. And when he first kind of showed me it a few months back, I thought it was really impressive, and it's something I've personally adopted myself. So okay, Kev, well, question number 3, as if that wasn't the perfect segue, how do you approach risk management when trading cryptocurrency?
Yeah, so I think it's just to keep this on the shorter side and as a summary, I think that my approach is that every trade that I take has a defined maximum loss potential. I mean, hopefully I'm not going to make a loss,
sure.
But if I do make a loss, it's capped at a particular point. And so the way that you do that is once you've figured out where your entries are and where your stop loss is, and depending on the system that you use, that the distance between those two is going to vary. That's why I was saying, I prefer to use 15-minute charts and particular strategies that make those as close together as possible, so you're wrong
sure.
quickly.
Yeah.
But basically, you take those two, and depending on where they are, that's how you define the position size.
Yeah.
So that if you do hit your stop loss, you have a very specific and defined loss.
Would it be fair to say that the further away your stop loss is from your entry, the smaller your allocation would be to the trade?
Yes.
Yeah.
And that's my approach. It's not the only approach that people take, but that's the one that I've settled on. And it's not something I came up with. It's actually maybe not the most popular way of doing risk management out there, but it's very prevalent.
But it's going to keep you in. I mean, again, if I had to use that mentality a much longer time ago, I probably would have staved myself from a lot of heartache, let's just say, because I think we've all had those big losses.
The thing is, it forces you to define your stop loss.
Yeah.
It makes you think about at what point is my trade idea or thesis
invalid.
Wrong.
Yeah.
Yeah.
I think one other point to mention on that as well, and just because I'm currently going through a funded challenge right now, and that methodology of understanding lot size or whatever you want to call it, in parallel to your stop loss is really important if you don't want to lose. If you don't want to get you closed on your account or whatever else. And so that particular method works really well for something like a funded account where you are governed by rules and stuff like that.
Yeah, and for me also, it's a slightly different interpretation on what some of the typical advice that you get with risk management. Like when I first started, I heard that each of your trades should be 2% of your overall account size, or 5% or 10%. Usually never more than 10%, but except if you're doing your crazy leverage trading, then of course it's 100% at the 100x leverage, and good luck. But so fine, 10%, but that doesn't really take into account where your stop loss is. So that's why instead of using a percentage of your account size, I prefer to use a percentage of that percentage of your, doesn't define the trade size. It defines how much you could potentially lose. And so if anyone wants any more information or details about that, I've got a whole video that's like an hour and 15 minutes long.
I will link that in the description actually. And there's also some really good calculators out there where you put in you put in the size of your risk, your stop loss, and then you put in your stop loss, your entry, and your account size, I think it is, and then it will tell you what your lot size needs to be. Is that, am I got?
Yeah.
Is that
I mean, and you also have to define what you want your
yeah.
percentage risk to be, on each.
Now, like me, Kev, you're also, I mean, I would define myself predominantly as a reverse trend trader, not so much of a great breakout trader. I like to kind of catch the reversals, and one of the best methods I've kind of latched onto is this idea of laddering into a trade. Do you want to give a kind of a sense on what that means for people who might not understand that?
Yeah. So you're asking about retracement trading?
Yeah. So kind of staging into your trade.
Right. So, if you look at a market and how it moves, and so my understanding of this, a lot of it came from, Elliott wave theory and other things like that. But the market moves in waves, and it'll go from bottom to top, and then it will pull back. And if you want your entries to be at the lowest possible point, which allows you to place your stop loss or your invalidation point, as close as possible to the entry.
Yeah.
So as it's pulling back, you would, the way I approach it is I would ladder in, because it could always go lower.
Yeah.
So you ladder in within a range, and then hopefully, your theory is that then it will continue its trend in the opposite direction. So what you're doing is you're buying at the pullback, to one, get the lowest price possible in that case, or reverse it if you're shorting, and two, to be able to place your stop loss closer to price.
But it's never a perfect line, is it? It always tends to be a zone, and the way I like to try and think of it is, specifically if you like trading liquidity and look for where potential liquidity sweeps will be, it's kind of like, well, understanding the zone or the area of value where you would want to see a reversal, and then this is where the kind of the safety comes into play in terms of an invalidation. Well, okay, if it continues, what would be an invalidation of that thesis? And then that's what that's how you'd approach it. It's like, it may be a reversal, but actually it may be a breakout, and then you don't want to be kind of left holding the bag if it is a breakout. And so you kind of combining them two things, you've got to be strict, but equally, if you do catch a good reversal, oftentimes it can be quite a profitable trade.
Yeah. And I think usually you can tell the difference. Well, not always, but there are ways of telling the difference between, is something a pullback, or is something like a reversal, where it's going to continue in the opposite direction. And then volume is usually the key.
Definitely.
At the time, but if that's something that you can't plan for in advance, you actually have to watch the chart and watch the candles form and the volume. It's forming, which is why it's very difficult to create automated systems or bots to do that type of trading.
Yeah. Do you put a lot of emphasis on VSA? Because I find myself leaning a lot towards looking at the kind of volume spreads analysis of candle by candle, volume tick by volume tick, to really understand, are we starting to peter out in terms of hitting coming into resistance, the candles are getting smaller, the volume's getting smaller, and that I've found that has really kind of, I wouldn't say taken me on another level, but when you combine a lot of different things in the way you think about trading, it's something I think most traders should really get a good grip on and a good sense of understanding how volume interacts with price action, and that the two are very much interlinked in terms of understanding how potentially you're going to hit a top and a reversal, or whether it potential for price to continue on.
Mm-hmm. Yeah, absolutely. I did a whole stint of where I was trading with volume spread analysis as a portion of a Wyckoff overall strategy that I was using. And at the time, I developed a couple indicators for measuring VPA and putting certain indicators, on the chart. But it isn't the type of thing that I think is easily done with an indicator. So I think, yes, you have to understand what's happening and why things do what they do, and the interaction between, the volume and the candle spreads and what that involves and entails. And then, so my then lazy shortcut is to take all that and kind of synthesize it up one level put it into an indicator, so I don't have to think as much
Yeah.
when I'm trading now. I can just kind of look at those. And what's funny is that's an indicator that I've never put up for sale in my store, because not because I'm trying to keep it for myself, and I don't want people using it like that, but it is the kind of thing that is like, people buy indicators because they just want simple things that they can use and hopefully make money. This indicator doesn't do that for you at all.
Yeah.
It provides you information that will inform previous things that you've learned, and if you haven't learned those things,
It's not going to make much
the
sense.
indicator's not in use. And so I just know if I were to put that up for sale, people would like pull a trial, and they would send me a bazillion questions about how to use it and why it's not doing whatever. So that's why I've never tried to sell that one, but I use it. I don't keep it on all the time, but it's on every one of my charts hidden.
Yeah.
And then when I'm like, especially when I'm looking to do entries or exits, then I like show it, flip it on.
Very good. Very good. Cool. Okay. I feel like this could be a whole segment in itself, but what are some of the common mistakes new traders make, and how can they avoid them?
Okay, so I'll start with one that's my pet peeve, which is people using liquidation levels as a substitute for their stop losses. Not just because that they're like throwing away like 30% or so of their money, but like that's not what I mean. I understand, like, this was BitMEX that started this whole thing. They were the first ones that had the whole isolated mode for leverage and what, because before that, like, you don't find that style of leverage use in traditional markets and brokers or anything else, where you can like modify your leverage level on the fly. You have margin and you can use that. Now crypto changed that because of the auto liquidation engines, where they don't have to ask you for to put more money. They don't have to margin call you. They just start liquidating your funds. But yeah, that, especially on BitMEX, that was such a scam, and it's really lazy. Like, people just like use a number in place of like actually figuring out where they should place a stop loss and get out. Again, it's because they're the people that are trading 100% of their bag and then they decide, okay, for this one I'll do 20x leverage. This one I'm really sure about, so I'll do 50% or whatever, and then they just let it like take their whole account. I mean, it won't take your whole account unless you're using cross, of course, but still. But
it's insane.
Why?
I mean, the amount of when even if you put, and you've got to be careful for slippage and the speed the price moves, but ultimately, as long as you give yourself a buffer, it can be relatively close to the actual liquidation. But I've seen up to 40%. Just so you lose 60% of your account, but you would have lost 100% of your account if the fact that you put that stop loss in there. And it's like, so many people, it's a great one to bring up, by the way, because I don't know how many people realize that or not, that actually you can save yourself at least maybe up to maybe 40% of your account for a few pips.
So that's one. Another common mistake, the one that actually we're all like guilty of, I think, at times because of FOMO and fear and things like that. But that's buying at resistance, or the top, because you don't want to miss out on the big breakout move. Or selling at support in the bottom because you're being greedy and you think it's just going to keep dumping. I already mentioned another one, which is thinking you're smarter than the market and not understanding that it is manipulated to some degree. And inherently, if it wasn't manipulated at all, then it would be random.
You wouldn't have patterns and shapes and all these things, would you? It'd just be completely random.
Yeah, I mean, you still probably have shapes, just because it's going to be based then at that point on pure human psychology. Which that's like the underlying, that's what Elliott Wave tries to define. But because it's also manipulated, like, it doesn't always work out that way. And there's a good book, The Random Walk, which talks about that, and it goes into like mathematics of like Brownian motion, which Brownian motion is somewhat random, but it's not random. Like, you can predict like patterns that will emerge from it,
Okay.
things like that. So yeah, that's
Yeah.
you can't solve the market by thinking 3 to 5 steps ahead of everyone else. It's
When did?
you can maybe gain an edge, but you're
Yeah.
not going to be right all the time.
Yeah. I feel like they're all really solid points. I mean, I think the kind of inducement and the manipulation piece, really, that's the one that really annoys me a lot, because so many newer traders, I just don't think, they're not geared up for it. I don't, I have this kind of sense where there's two versions of the charts you look at. There's the chart which everyone sees, which is, your candles, your patterns, your triangles, your flags and whatever else. But then there's the other side that is the kind of veiled manipulation piece, where it's really all about creating these pools of liquidity for bigger price action to move and gain that momentum. And I don't know how many people fresh coming into the realm of trading, let's just say, understand that. And it's not just something I think you can learn at the click of a finger. I think you need to go through the tribulations of trading, lose a few trades, get a few scars, and then really start to understand it. But when you do, I think it really brings you up another level when you start to understand how markets are manipulated, and it's just something you have to learn.
Yeah. And for someone that's new as well, you have to understand the way that we're using that word manipulated.
Sure.
Because I mean, we're talking about price manipulation in a way that happens in all markets, and all over the place, and it's just part of how things are. That's what that's the basis of Wyckoff. Of course, that's changed today because of high frequency trading, and that's like another way of that things get manipulated. But like people, you don't need to get mad about it. I think that's a mistake that people make, because they go on and they watch a YouTuber that's like after a dump, and they're like, yeah, manipulation, like as if you have someone to go after that you can recover your money from and sue them or something. It's just how it is. You have to figure it out, and then work your system so
you
that
can
it works
still be successful despite the fact that there's inducements and manipulation. It's not it is what it is. You've got to get on with it. Yeah Awesome.
Yep.
Cool. Okay, where are we next? How do you keep up to date with news? What's your general kind of go-to in terms of understanding what's going on in the markets, economic wise as well?
Yeah, so I guess I have a lot of different sources, and before I mention any of them, all of these get filtered, because they are also ways that market manipulators manipulate you. So
it depends on who holds the news, right?
Right. I mean, so I use Crypto Panic quite a bit, which is just a news aggregator, and it's up on one of my screens all day long. And if I see something there that looks interesting, then I click on it, read it. But it's basically all the aggregated crypto news kind of thrown together into one feed.
I'm going to post all these links, by the way, that Kevin talks about, because I think they're really all, because I'm not even familiar with this, so it's really good to kind of make sure that it's good to get from that. So I'll post all these links as well. Sorry, Kev, go ahead.
Yeah, and then I mean, I do watch YouTube a lot for that, and it's mostly in my mornings, just because I can have it on in the background while I'm doing things.
Yeah.
But you have to. I mean, I've watched a lot of different content creators across the way, and you find some that you like, some that you don't, some that you don't like because they disagree with you, but you watch them anyway because you need to sort of remain balanced.
Yeah.
Others that you just are you're watching them basically to counter trade, to some degree. And there's others, I'll even mention one. No, maybe I don't want to mention. I'll mention them. So BitBoy Crypto.
Oh, yeah.
People hate that him, but what I find with his streams is it is a quick way of getting exposed kind of passively to the news that's going on.
Yeah.
Every time I watch any of his stuff, I always fast forward past any of the price or TA related trading stuff, because that's horrible. Like unless you're gonna like watch it to counter trade stuff.
Yeah.
But he gets through the news in a fast and entertaining way.
Yeah.
So I like it. I just throw it on like while I'm eating lunch.
Fair enough. Interesting.
I kind of do the same thing with CNBC. You know, sometimes, especially on any days where I know that there's like going to be important news coming out in the markets, you know, or when there's like big movements happening in the traditional markets.
Yeah.
Because actually, at this point, I guess no, I'm about 50% as far as my traditional financial portfolio and my crypto portfolio.
Right.
My stock portfolio that is actually bigger than my crypto portfolio at the moment, but like 30 to 40% of my stock portfolio is actually crypto stocks.
Yeah.
So
yeah,
it probably is about 50-50 for that.
Do you put much?
And then of course Discord. I'm on like Discord channels all the time just to see what other people are talking about and learn, and I can learn from them.
Do you put much stock into Bloomberg at all?
Not. I don't watch it specifically, but I do. Like if there's a topic that they've published on YouTube, they often will pop up in my feed and as recommended stuff, and I'll watch them. Yeah,
I tend to watch it just first thing in the morning when I wake up. I just kind of get a sense of what's going on in it. Try and get a sense on what's going on in Asia. I normally catch the kind of the LSE Open, and then sometimes it's just on in the background, just to kind of filter through. But I think a lot of that, and like you say, you're spot on. You've got to be careful because a lot of the media, it depends on who owns the main broadcasting channels, especially these big entities who have a vested interest in driving the narrative one way or the other. So, it's difficult to kind of figure out where the reality needs to be versus what you're being fed. So, cool, awesome stuff.
Interesting thing, because you mentioned Bloomberg. I mean, that's kind of the same way I use CNBC.
Yeah.
But what I actually have found with CNBC is I like using CNBC to get like the non-financial news.
Yeah.
I mean, obviously they only report on things that would have potential financial impacts, probably. But when it comes to like normal non-financial related news, they're actually like right in the middle.
Yeah.
As we compared to, in America, like half of the news outlets are like very clearly liberal based, and the other are, conservative. And CNBC seems to be very balanced in that. Because for them, I mean, their audience is both sides, so they have to.
Yeah, stay partial.
Mm-hmm.
Okay, good stuff. Thanks, Kevin. Okay. What indicators or metrics do you rely on when analysing the crypto markets?
Okay, so, I because of my trading systems, market structure is, a big and main one.
I would completely agree with that.
So especially if I'm like doing SMC style trading there, but then I also this is kind of structure as well if you believe in Fibonacci retracements and algorithmic following or Elliott wave rules and that kind of thing. But those types of measurements made, I guess is kind of structure as well, is what I'm saying. So I usually look at those two things, and then as I'm taking the analysis to one step further to see if a trade is possible in a particular setup, I'll always have indicators on my charts to measure something volume based, something momentum based, and something volatility based. Now, the three that I use for that for volume, it's usually PSRVA candles. So whatever you want to call them, your vector candles. For me, that's just a very easy way of looking at a chart and finding where they are. You can use other methods for finding those high volume candles, including volume charts at the bottom or anything else. For me, at a glance, that's the easiest, quickest way for me to determine where volume exists in the chart. If I want to take it a step further, I'll use a volume profile type tool to get different levels. For momentum, so many choices. I mean, that's actually what the bulk of oscillators is measuring some type of momentum on a fixed range. usually 0 to 100 or negative 100 to 100. For me, I use one of my own indicators for that, but you could use any RSI, MFI. It doesn't really matter.
Yeah.
They all kind of they'll peak
similar.
at different points, but once
Yeah.
you're used to how they work,
Yeah.
you can work with any of them
Yeah.
to determine momentum. And the way that I use that is I wouldn't enter based on like momentum swinging one way or another.
No.
But if I have an entry based on my system and the momentum is like at the total opposite side,
Yeah.
then I'm going to skip that.
Yeah.
And I'll also use them for exits though, because
Yeah.
when you start seeing momentum shift,
Yeah.
that's like a good way to exit.
On the momentum ones, I don't know if you've noticed this, but there's different ways in which I think about them. Like, if we're in a trend, just a a nice trend in market, they tend to be more accurate in terms of the tops and the bottoms, in terms of whether you're on a shorter time frame or a higher time frame. But in a trend, they're not great to use if you're trying to catch the top for a pullback on, because sometimes they can just really blast out and go way into the 90s or whatever else. And
Yeah.
I don't tend to put as much stock in them. It depends on what type of a market I'm trading in. If it's just ranging and trending, then I put a bit more focus on it. But in a trending market, I don't tend to focus on momentum indicators, because oftentimes they won't be correct.
Yeah, so this is where this is why there are so many of these indicators, because some of them will work better for your situations
Right.
on what instruments you're trading than others. For mine, one of the things like with RSI that I didn't like was that it wouldn't
take
always
volume.
go from 30 to 70 and back and forth, like especially when you're ranging, it would just get to the middle and turn around. And so I built an indicator that uses a lot of cycle theory to give you where the likely tops and bottoms are, so it's not just a static 70 and 30. It actually moves with it, so it's a dynamic RSI. To your point, where in a trending thing where it'll blast out, there's an indicator that I used to use for that, which was really cool, because when it would get to the top of that range, and it was not like a line, it was a heat map, but when you got to one end or another, it would, and it's blasting through like that top end, it would look at the next time frame up, to give you an idea. Because if you think about it,
Oh, that's smart. Yeah.
when you're doing
Like
your
a 5 minute
up,
to the 15 minute, you might be at the top of the 5, but you're only so far the way up on a 15, as an example.
right,
Very
and
cool.
and it would only do that bump up to the next time frame, when the current time frame was maxed out. So it would give you a kind of an idea of
Oh, that sounds very. I
where
like
it might
that.
actually reverse.
Yeah. Do you tend to, and do you use that in your kind of trading right now? Is that something you have on your charts?
For that one, I don't use that one anymore. But like I said, I have my DSI indicator on every chart, which I use because that one, it's helpful for me because not only can I see where the likely turns are, but it also shows me divergences easily.
Yeah.
So,
I think they're really important and probably overlooked for the newer trader as well. So, awesome.
And then, just to kind of finish that out, I think a volatility indicator, again, there's a lot of different ones you can use.
Yeah.
I use one of my own, but it's the one that I use. The part of it that's the volatility that I think is useful for people is it's a percentile ranking of volatility over the last 100 candles.
Wow.
And so the way you use that is like if you're in a trade, the volatility will usually give you a signal as to when you should exit the trade, because you've reached the peak and now you're consolidating. And the other way you use it is it gives warning when you stayed at really low volatility, because volatility tends to go from
high to low
and low to high.
How accurate have you found, in your kind of utility of that? How accurate have you found that? Is it pretty accurate at finding the tops and the bottoms of the volatility?
It's actually more accurate at signaling when you're about to have a big move. Now, that signal can actually repeat for many candles, but at the point where let's say that you're in the percentile of 1, it can't go to 0, so it can only go up.
Yeah.
But it could also just stay at 1.
Yeah.
So it may stay at 1 for, like 5 candles, but when it does start going, there's probably going to be a gigantic move, and the longer it stayed in that warning zone, the bigger the move will likely be. And I found that that's very accurate.
Yeah. Of course, it won't tell you what way the volatility is going to go, but you are in for a big surprise at some point coming up.
Right. I mean, that's where that's possibly where you can do use like some hedging strategy, or a breakout strategy if you want to do something like that too.
Okay, good stuff. Yeah, I completely agree. I mean, I tend to find myself using less indicators nowadays. I still have a few that I like, but very much the same as you. I like to know volatility. I like to know momentum. I always have like an MFI just to kind of get a sense on overbought and oversold. But okay, cool. Next question then, my friend, is can you walk us through a successful trade you made and explain your decision making for such trade? I
can. How would you like? You want me to verbally walk you through this, or you want me to? I mean, show a chart?
Do you have the ability to pull up a chart? I don't. If you have the ability to pull up a chart, it might be worthwhile having a quick check. I don't know. This is my first time of doing this, so you might have to forgive me for.
Yeah, hold on here.
Try that. No, that didn't do it. It's actually a better view that though, actually.
All right, I don't know if you can still hear me, but my screen is locked at the moment.
I can hear you and see you.
Okay. Wait, there it goes. Maybe.
I mean, if you can't pull it up, then maybe just give an overview, kind of verbally, if you can maybe describe what you were thinking at the time when you was thinking of your entries and where your stop loss might have been.
So I don't know. Can you see my screen now?
I can just see you, me and you on the screen. It's not sharing the. Oh, actually, no. Let me just add that to stream. Oh, perfect. The screen is yours, my friend.
Let's just go here. All right. Let's just go back, do a replay. I'm a little laggy, probably because I do have a 4K screen, so
yeah,
that's probably why it's chugging along. Oh, let's see, this point's a little lower. Let's go back to there. Okay, so let's say that we're here. As you can see, I have the 3 indicators on here that I talked about. So I have the volume candles, my DSI indicator here for momentum, and then this nutshell indicator here actually does more than it's showing, but I only have the volatility stuff turned on for it. For here, I would probably be. I guess this is. Now let's start right here. So as this moved up, I would probably take a measurement like this. Let me switch this so there's not so many lines. And as we were coming back down, so actually let's do that. We'll go candle by candle. So here we've had what looks like an impulse, 1, 2, 3, 4, 5.
Yeah.
And as it's coming down, I'm looking to enter on the retrace of this. The primary areas that I'm looking to enter in are between the 0.5 and the 618. So this is like my algo following trading, because these are the areas that the algorithm would do an entry. They would enter here, start there. They possibly sometimes go lower, but let's just look at there. So I'd probably create my order. The first entries would be here at the 50, although my average entry would be probably in between these two lines, because I would enter all the way down to the 618.
Yeah.
And then I would probably exit just below the 707, because that's the platinum zone.
Sure.
And I would target up here. First target would be at this negative 236.
And for those watching, Kevin, your retracement tool is specific to the way in which you've already mapped out your positions in terms of the zones that you want to, your TPs. So if you're a newer trader, your indicator's probably not going to look the same as what Kevin's is, but that's because he's modified it in ways in which he utilizes for his own way of trading.
Yeah, that's true. So my fib tools, the fib tool in this is actually the fib retracement tool in TradingView is completely customizable, so you can set it to whatever levels you want.
Yeah.
And these are levels I have. Now I also look at my momentum here, and you notice this big red triangle notes a divergence.
Yeah.
Right there, and also you see it was hitting the top of that line, and then as it crossed back below that line, we got this red zone, which basically predicted this retracement coming back down. Funny, it also in this indicator also picked the top out.
Yeah.
Right there, and that's funny because that uses a completely different method.
That's nice confluence, right?
So anyway, let's kind of move this along and just.
And was this a trade you'd taken?
Probably.
Yeah.
I don't remember for sure. I just sort of picked something that was from a couple weeks ago. I think I did. I think this was one that eventually I ended up turning into a swing trade and held on to it for like 600%.
I remember.
So this was last week, right? This was April 9th. Yeah, it was last week, maybe a week and a half ago. So funny, right here, I ended up getting another divergence in the bullish side, which it's fine because I'm expecting a three-wave pattern, right, to come down here based on Elliott wave. So there we go. Hits right there, and that's where it would hit the first of my entries.
Nice.
So we got that.
When you was figuring out your stop, why didn't you clear? Like the way I would have thought about it is I would have probably wanted to clear the bottom of the wicks, let's just say on the two preceding wicks, or maybe the previous wick there where your crosshairs, and maybe not go as far as that one, but I probably would have wanted to clear that one in case there was a low resistance based liquidity sweep, but didn't quite take the main liquidity.
Yeah, so my assumption here, Elliott wave style, is this is a 1-2.
Got it.
And with that, yes, it can go all the way down to where you just said.
But that would have been invalid. Yeah.
Before it becomes invalid. However, in this case, that's too far for me. What I would actually do is I'd look at this, which is my platinum zone, and I actually eyeballed that pretty well. I would want my stop to be just on the other side of this 747.
Better risk to
yes,
reward.
it can go down below that at different times, but once it goes below that, it starts becoming more and more, or I should say less and less likely that this is actually a 1-2.
You've specifically
this becomes more likely to be a 1, 2, 3, 4, 5 before another bigger drop.
And for those out there, Kevin, the way he's thinking about this is he's actually thinking about the Fibonacci retracement and the zones in which he would anticipate where it potentially would go to fill a zone, rather than just thinking about liquidity and where the price action might go to. So you've got a specific set of ideas in terms of structure, probably a better way to market structure, rather than just thinking about it in terms of pure liquidity, where liquidity might be. And so that's why,
if this was an SMC style trade, then I would be looking at those a lot more and order blocks and all the rest. I just figured this would be like a quicker
Well, it worked, matey. So
example.
not wrong with that.
One of the things to notice is as this was coming down, it's here on this DSI, it basically hit that line like right here at the bottom. Well, what I hope is the bottom at this point. But that's a good indication, so it didn't go all the way down to 30. It only went down to like 40.
Yeah.
Which is where my cyclical line was predicting it to go down. And also in the volatility, once we started coming down, it was cooling off. That's where it turned purple.
Yeah.
So that is a good indication that this is consolidation, not impulsive movement.
Yeah.
And just to kind of point this out, here's another volatility aspect here where we were squeezing this whole way until we got to this yellow bar, which was the release of the squeeze, and that was actually one bar before this big giant green vector candle showed up.
Yeah. You can see it got nicely recovered as well.
Yep. And so kind of moving forward in this, we just see where it ends up. Okay, so here it hit
very nice
first target, almost hit second target up there, not quite. And at this point, I would have probably taken half there, and this was a 3 to 1, so small. As it goes on, I think what I actually did was in the end, I counted this as a 1-2, and then we had a 3, and then a 4 retracement. So then I was like looking at the bigger chunks. So my positions started getting bigger and bigger, but I know I started it here down at that fractal.
Do you add into trades, Kevin? So if you're on a winning trade and you've got a lot of unrealized gains, do you tend to add in on retracements if you want to keep hold of the trade?
So after I take partial profits, then I will look for another entry.
Nice.
And notice that here though, I may not have because these were vector candles going into this. I probably wouldn't have placed my target profit there right away. Just because there's so much volume coming in.
You anticipate further move.
But right here, I would have definitely taken profit because we're like at the peak of. And it's like definitely the momentum's definitely turning over right here. So somewhere in these wicked areas up here, and I'm sure if I added in my other one that I normally use, we'd probably see something going on up there, VPA wise. So it like marked that as an up thrust, which is a Wyckoff like climax type event. So
nice job.
That's the trade.
So that was a bit of a combination of kind of structure from an Elliott wave, picking the right zone at what you thought it was going to come back at, which was pretty much on point. It also came back. I noticed there it almost created like an order block where it came back down, tapped it, before shooting back up to the upside. So it was a really, really nice trade. Well done and congrats. What was your mental state like? I mean, it's always nice.
And I'm sure actually if I turned on like the SMC stuff, that probably was an order block right there.
You could see it just come back and tapped into it, and then it was off for the races. Really good stuff. Lot of good stuff, lot of good takeaways from this one. I'm so pleased there. The main man was on for the first one. Okay, cool. Next one we've got, again, probably leading into what we just discussed, but kind of the emotional and the psychological state. I mean, I've always thought it's, those people who don't get too crazy when they have a huge win, but also don't beat themselves up if they have, a loss in a better mental state. And I've struggled with both of them in the past because it's difficult. I think it's just the devil and the angel on your shoulder, oftentimes kind of competing around, your mental state when it comes to trading. But it probably tests people more than most any profession, because it is money, and money tends to speak to the heart of every human. But what's your mental state in terms of dealing with trading, and are you Do you often find yourself in that kind of camp where you edge over?
Yeah, for sure. I think we all are to different degrees at different points. You can work on the actual psychological aspect of this.
Yeah.
When I was a new trader, I read and listened to a lot of books.
Sure.
That cover psychology of trading. So that's one way. But I think the other thing you can do is put in place some crutches that will help you cope with that sort of thing. So like controlling risk is a big one.
Yeah.
Once you know that you have a maximum loss for something, it's easy to walk away from that trade and just let it do its thing. If you set both that and a target profit zone, you really don't, it doesn't have to be managed at all.
Yeah.
So that's great for overnight
Sure.
types of things.
Yeah.
Helps you sleep better. As I mentioned in the Discord yesterday, I do it all the time when I'm getting ready to go on a ride where I know I'm not going to have access to even my phone because it's in the back of my jersey.
Yeah. Fit and forget.
So you can just set it and forget it.
Yeah.
For now, my stop losses are usually set. And yes, if I was in front of the chart, I would maybe manage it more, actively as more data was revealed in the chart. But it's okay as long as it's set. Especially if you can set it in profit.
Yeah.
Then you really don't have to worry about it.
Yeah.
For the target profits, sometimes I'll set those and sometimes I won't. If I don't have a really good target, especially overnight, but I think it's just going to either go up or stay in a range, then I'll just leave that, and whatever the morning brings, it brings. It's not really a problem for me anymore.
Yeah, that's very good advice. And it sounds so obvious, but people still don't do that. They I think the greed element can sometimes factor in. And
if you ever find yourself waking up in the middle of the night and you reach for your phone to check your position, margin size and profit, that's a definite warning flag.
Yeah,
warning sign.
Intuitive. Yeah, for sure. Yeah. Okay, I think you will be happy to know we are on the final question. And just before markets open, although we probably might just slightly overlapped, what advice would you give to a new trader who's just starting in the crypto markets?
So I would, do a lot of research.
Yeah.
I would probably stick to trading Bitcoin or maybe Ethereum, just because there's more data and more people out there trading those things.
And liquidity,
Then it's not really for you as a new trader. The liquidity is not as big a deal, but it's just those smaller coins. One, you're gonna find it difficult to find other analysis that people are doing on those smaller coins. And that's one of the ways that you can learn early on, is to just watch and listen to other people's analysis. I'm not saying that you should follow all of them, for sure. That's dangerous. But when you get to the point where you can understand where they're coming from and where it aligns with your own thoughts and ideas. So build that, do some trading with very small amounts. Paper trading is not the same. If that's all you can do, that's all you can do, but it's better than nothing. But I would strongly suggest just throwing even if it's $100 into an account, trading that. In that case, you probably want to trade ETH rather than Bitcoin, because especially as Bitcoin's price goes up, most exchanges 0.00 or 3 zeros and 1, so 0001 is the smallest amount you can trade, which right now that's $30. So that might be a lot for if you only have $100 in the account. ETH is actually more technical, I think, in a lot of ways. It's more volatile than Bitcoin, so that's you got to decide which poison you want there.
Would you?
I would probably. No, go ahead.
Sorry to interrupt. Would you say for a newer trader, they can skip the basics and dive straight into something like SMC, or is there you need a sound base to start from before you get into SMC? Is there a way in which you can kind of get a head start, or what would you say?
Yeah, I think SMC
it's quite technical.
difficult.
SMC, it's not straightforward.
Yeah, I think you could. I mean, you can actually trade successfully using just like the most basic TA possible,
Yeah.
like which is finding support and resistance and
Yeah.
trading against that. The key is if you want to be profitable to have sound risk management.
Yeah.
And if you could do that, you only need to win like 25% of the time.
Yeah.
Which you should be able to do just using support and resistance, honestly. And that's a very easy way to start. Get control of that first, and then start building on the concepts. Build liquidity into that, and then start looking at volume, and then you can start getting into things like order blocks and other breaker blocks and all the different SMC types of things. And then at some point you get pretty good at that, and you get mad that you still lose sometimes because there's SMC traps out there and those inducements, and you can then break away into other strategies to find confluence that will usually keep you out of those traps.
Kevin, it's been an absolute blast. I want to just make sure everyone knows, if anyone wants to find out anything about Kevin's indicators, wants to find out more about what he's building, or even if you guys have a specific idea about a type of indicator that you'd like and you need someone to maybe build it for you, what I'll do is I'll leave all of Kevin's details in the description. Kevin's also in the Discord server and quite active like me, and so if anyone who's watching this isn't in the server yet, please come over and say hi. Completely free, there's no charge, it's just trying to build a community of like-minded individuals. Kev, do you have any final thoughts before we close this one out?
No, just want to say thank you for having me. It's
pleasure.
Been fun.
Absolute pleasure.
And I look forward to seeing you and everyone else in the Discord and kind of continuing our journey here.
Excellent. Kevin, thank you very much for your time, and I shall let you go, my friend.
All right.
See you soon.
Have a good day.
Bye now. You too.